Hi students, welcome to Sunil's tutorial. I am Sunil Mirwani and today we will be doing this chapter called as buyback. Right? Let's see this. We are doing question number 21 in the books of Afcons Limited. Right? Now, what is buyback of shares? Buyback, it indicates buyback of equity shares, right? Now, ideally, a company is not allowed to buy back the equity of buy back its own equity, right? But if the company wants to reduce the capital of the company, then after fulfilling certain provisions under the law, the company is allowed to buy back. In order to buy back the equity shares, the company should have sufficient reserves. How do you find out what is calculated as sufficient reserve? The government has laid down certain rules to find out that if this is the extent of your reserve, you are allowed to buy back, and this is the maximum amount of buyback that you can do. Now let's try to understand the rule. The first thing that you have to do is, when you are buying back, the company has to find out what is 25% of its own funds. Now how do you calculate own funds? You first find out your sources of fund. Sources of fund, what are your free reserves plus your security premium plus your paid up capital. So your reserves and share capital combined together to form own funds. In any particular year, as per the government rule, you cannot buy back shares which equal to more than 25% of your own funds. The maximum buyback of equity shares that is allowed in a particular year is equal to 25% of your equity funds. That's the first condition that the government has laid down for buyback. Second, your buyback should not affect the creditors of the company, right? So in order to do that, we find out minimum own funds. You should, after buyback, have sufficient funds to pay at least half your loans. So your minimum own funds that you require is total debt divided by 2. Hence, the minimum funds that you require after buyback is whatever your funds minus whatever you require to pay back the loan. Funds minus required to pay back loan is your funds that you require after buyback. Okay. Now, how do you determine what is the 25% limit of your own funds? The maximum nominal value of equity shares that can be bought back is 25% of your equity share capital. I already told you, the government has specified that in any particular year you cannot buy more than 25% of your equity. Right? Once you know that, find out the nominal value of the shares. So you will come to know the maximum number of shares that can be bought back. And in order to buy back the share, it is not necessary that you may always get it at nominal value. You may make an offer price to the equity shareholders. So if you are making an offer price, then the buyback amount that you will have is number of shares you are buying back into offer price. Once all these three conditions are fulfilled, government says that the maximum possible buyback you can do is the least of the three amounts. You've calculated three different amounts, whichever is the least of the three amounts, that is the maximum amount of buyback of equity shares that can be done in a year. Now this will be more clear once we do a sum. Can we see sum number 21, Afcons Limited? Now let's look at the balance sheet of Afcons Limited. They are saying that the balance sheet of Afcons Limited is as follows: equity share capital, preference share capital, security premium, general reserve, profit and loss, debentures and current liability. Keeping in view with the legal requirement, the maximum number of equity shares that Afcons Limited can buy back at the rate of 25 per share. So Afcons has given an offer price of 25 per share. Now let's try to find out our free reserves. If you look at balance sheet, you have general reserve and profit and loss. Both are your free reserves. You have general reserve and you have profit and loss. Both are your free reserves. The general reserve amount is 1 lakh. General reserve amount is 1 lakh. Profit and loss amount is 1,22,500. So your total free reserves that the company has is 2,22,500. The amount that is available in your security premium account. Look at your balance sheet, guys. The amount available in security premium account is 1,27,500. So your total sources available 7, 8, 9, 10, 5 are 3,50,000. Right? I added the two. Your equity share capital, guys, as per the balance sheet is 4 lakhs. Equity share capital as per balance sheet is 4 lakhs and preference share capital as per balance sheet is 1 lakh. So your total paid up capital is 5 lakhs. Hence, your total own funds are going to be 8,50,000. Or did I get that? 3,50,000 plus 5 lakhs. 25% of own funds. So 25% of 8,50,000 is going to be 2,12,500. 2,12,500. Circle this amount out. Right? So maximum amount that can be used for buyback is 2,12,500 based on the sources that you have. Now let's move on ahead. Minimum own funds. Minimum own funds is debt divided by 2. Now debt, look at your debentures. Debentures is your debt. So that is going to be 8 lakhs. 8 lakhs divided by 2. That is 4 lakhs. That's the minimum own funds that you need to keep even after buyback. Right? So required post buyback funds are going to be your own funds before buyback minus buyback. Your total own funds, guys, look at this. Your total own funds you have found out as 8,50,000. So this is going to be 8,50,000. That's your minimum, that's your own funds minus minimum own funds. That's 4 lakhs. So that comes to 4,50,000. This is your second amount. This is the minimum amount that you have to keep to after your buyback. Okay. Next, let's move on ahead. Maximum nominal value of equity shares that can be bought back is nothing but 25% of your equity share capital. Your equity share capital is 4 lakhs. So this is 25% of 4 lakhs, which is going to be 1 lakh. 25% of 4 lakhs is going to be equal to 1 lakh. Maximum number of equity shares that can be bought back. Maximum NB we found out is 1 lakh. Divided by nominal value of each equity share. Look at your balance sheet, guys. From here I got this 1 lakh. Right? If you look at your balance sheet, the value of each equity share is 10 rupees. So this is 10,000 shares. You are not buying at nominal value, you are buying at offer price. So the amount that you will need to buy those shares, you are buying 10,000 shares and your offer price is 25. So you will require 2,50,000, no, yeah, 10,000. Someone please check this. 25 lakhs?
2,50,000.
So that's why this is 10,000. Okay, this is 10,000. So this is going to be 2,50,000. Someone check. Yes. So this is my third figure. Right? Now, the maximum number of shares that can be bought back. Guys, I have 3 figures. One is 2,12,500, 4,50,000 and 2,50,000. The minimum of these 3 is 2,12,500. The minimum of 1, 2 and 3 is 2,12,500 divided by offer price, which is 25. So when you divide this by 25, you will come to know that 8,500 shares can be bought back with the money that you have. So although the maximum number of shares that you could have bought back is 10,000, but since you are not buying at nominal value, you are buying at offer price, you will be buying back 8,500 shares. Once you come to know the number of shares that can be bought back, then you move on to journal. You have standard 4 entries in the journal. You will be making journal of Afcons Limited. Right? you are buying back. Debit, what comes in? Equity shares are going to come in. So this will be equity share capital account debit. You are not buying at nominal value, but you are buying at offer price. That means you are going to be paying a premium on buyback. Debit. 2, you are going to be buying from the equity shareholders. Equity shareholders account. Right, you just found out that the maximum possible buyback is 8,500 shares. Face value of each share is 10 rupees, so 8,500 into 10, 85,000. The maximum possible buyback is 8,500 shares. The nominal value of each share is 10 rupees, 8,500 into 10, 85. A 10 rupee share you are buying for 25 rupees. That means you are paying a premium of 15 rupees. A 10 rupee share you are buying for 25 rupees. That means you are paying a premium of 15 rupees. 15 rupees on 8,500 shares. Can someone please calculate? 1,27,500. So add that comes to 2,12,500. Right? So this is being buyback made due. Right? You're making the buyback due. Now before I actually buy back, I need to arrange for the money. Let's arrange for premium first. I need 1,27,500 premium. I need 1,27,500 premium. Look at your security premium account, guys. You have exact 1,27,500 in the premium. You want 1,27,500. You have 1,27,500. You can use this money. So this will be security premium account debit.
Why debit?
You're using that money, na? Liability. When you use liability, it is debited. When you use assets, it's credited to premium on buyback. It's an expense, debit expenses. I'm using security premium to pay my expense, right? Premium on buyback, 1,27,500. 1,27,500. Being premium arranged. Right? Once you've done that, now I need to arrange for the CRR. I need 85,000. Where do I have money? I have money in P&L as well as in general reserve. So I'm going to use P&L. I have 1 lakh in P&L. I need 85,000. So this is going to be P&L account debit to capital redemption reserve, 85,000. Being CRR arranged.
So you should cancel the 0. 1,27,500.
1,27,500. Now, once you arrange for the CRR, then you pay the preference shareholders and actually buy back. Not preference shareholders, sorry, equity shareholders. You pay your equity shareholders account debit to bank. You are paying the equity shareholders 2,12,500 and buying back your shares. Being shares bought back. Right? That finishes your sum. We'll stop this here for the day. Thank you very much.